The New York Stock Exchange is trying to expand its second largest business, which is not U.S. stock trading. Let's say there now, our Suzanne O'Halloran has an exclusive interview with the person in charge of making this unit a growth driver for the big board. Suzanne?
Well, thanks, Mark. It is a common misperception that U.S. stock trading accounts for the bulk of revenue here, but in fact, they have two other large businesses, market listings, and right behind that, the derivatives business. And Tom Callahan is with me today. And Tom, you're in charge of making sure this business is a success. You have some new products that you're rolling out today, really expanding this business in just a year. Fill us in on those.
Today we launched MSCI index futures on the emerging markets, EFA, which is the developed world outside of U.S. and Canada, as well as the MSCI USA contract. As you may remember, NYSE acquired a futures exchange in 2008 from the CME, and we have been trading precious metals up until today, gold and silver, and with gold above $1,000 for the first time today, that's a busy market for us as well. But our intention from acquiring the platform is we wanted to be a global multi-asset class exchange, and we're thrilled today to be able to start down that road with MSCI.
Okay, so those begin trading today. The CME really controls the lion's share of this business. How are you going to make a dent in that?
Well, it's partly due to the national advantage that NYSE has in the U.S. We run the Life Exchange in Europe, which is one of the largest derivatives exchanges in Europe, so it's a space we know extremely well. We've got exceptional technology. We've got accounts all over the world, but about a third of the volume for many of our European contracts comes from clients based here in the U.S. So it's a combination of great technology, great distribution, innovative products like MSCI, and also a new clearinghouse that we're currently building called New York Portfolio Clearing.
Okay, we also have the SEC and the CFTC looking at regulating your area, perhaps more cracking down on regulation. Are you worried about that, and is that going to hurt your business?
No, because I think that there are some real efficiencies that can come out of a better coordinated CFTC and SEC. At the hearings last week on better coordination that were attended by Larry Leibowitz from NYSE, they talked a lot about portfolio margining and how clients can get better efficiency between their securities positions and their derivative positions. For NYSE, as we are a global multi-asset class exchange that trades both derivatives and cash, as we're building a new clearinghouse, it's going to clear derivatives and cash together in one environment. We've got a lot of upside if that comes together, so we're pretty excited.
Okay, your job is to sell these products. I heard you were in Boston making the rounds with some of the big fund companies up there. What was the reception? Do fund managers want this product?
MSCI has got $3 trillion that follow their global benchmarks. 90% of U.S. asset managers are benchmarked against MSCI indices. If you look at the top 10 ETFs that trade every day, EM and EFA, two of the contracts we listed today, are always in the top 10. So there's a wall of money that follows these from asset managers, pension funds. The ETF world proves that there's demand for liquid tradable versions of these indices, and so we think that in futures form, they'll be very well received.
Great. We've got to leave it there. Thanks for your time. Good luck on the new venture. Lori, Mark, back to you.
Suzanne O'Halloran live at the New York Stock Exchange. Many thanks.